What up? What up? What up? It's your man, Boss Gang VIP, and I am excited to be with you once again. This is actually one of my favorite times when we actually get to add to our portfolio, when we get to make some changes, and when we get to see what the future is going to look like. This is definitely my favorite time. This is the new money stock portfolio, and I'm excited to have you here with me today. If you haven't already, make sure to like the video and subscribe to the channel so you can get the updates as soon as they drop. Let's get into it. Roth portfolio. What we want to do is make sure that everything is 100% fully transparent. So I actually made a contribution July 23rd, which was yesterday, and we got the Robinhood 1% match. I actually sold Energy Fuel. One of the reasons is because I want to consolidate the portfolio, especially because we're just starting out. So I want to have everything concentrated. So I went ahead and I sold off the Energy Fuel. Only had 1.2 shares, so wasn't obviously that much capital. And I actually put $101 into Alarian MLP ETF. So we have two shares at $48.62 a piece. One of the reasons I went ahead and added the AMLP position is because I wanted to have exposure to the pipelines and the consistent dividends that get paid out on a consistent basis and are constantly growing. One of the things people don't realize is that these pipeline companies have been outpacing most of the market. So there have been a lot of talk about tech, and I'll actually get into some of the numbers. So let's go ahead and look at AMLP. Now, if you go to the very first Roth portfolio video in this series, when we first got started, I actually did a breakdown of MLPs and what they are, and a couple of MLP stocks that I own in my personal portfolio, and some of the ones I tell people to really consider whenever they're starting their portfolio. Because of some restrictions with Robinhood, I was unable to add some of these names individually. I contacted Robinhood and had a discussion and figured out something that I am able to do. So that was to add AMLP and still get exposure to some of my favorite stocks to buy and hold. Let's go into some of the holdings of AMLP. Obviously, it's energy and 2.23% utilities that make up this portfolio. The top 10 holdings as of July 22nd, 2024. Plains All American Pipeline. If you actually watch that first video, I've told people that I've been a PAA shareholder for a really, really long time, and this is one of my favorites. Another one that's one of my favorites that I couldn't add directly was Energy Transfer. I absolutely love Energy Transfer. And then we have Western Midstream, Cheniere, USA Compression, Cheniere, and you know, a few other names that you might know. Now, the thing about the midstream companies are there are not tons of different options, and this pretty much captures a good majority. So if you notice, the holdings are pretty high, 13%, 13%, you know, 12.5%, right? Because there's just not a lot. So where a lot of portfolios, you know, people might have 10% of one and, you know, a small percentage of another one. This right here has a large holdings, which I am definitely okay with that because I really, really like these companies. Let's check out some of the performance. So the performance has been definitely improving on these. 10-year 1.55%, 8.76%, 5-year, 3-year 18.84, 1-year performance percentage price return 32.74%. So yeah, when you're getting 32.74%, that's absolutely amazing, but it's not one of the things that are going to make the headline. Typically, the S&P and large tech, Mag 7, whatever you want to call it, those are the stocks that typically get the most media exposure. We're not concerned about what gets the most media exposure or what's the most popular. We're just simply concerned with trying to get a nice return on our investment. The other thing with this portfolio, I was actually going to consolidate. I considered consolidating this Coke. Now, Coke has, been absolutely fantastic. Um, so yeah, it's up 9.41%. The reason I'm going to hold on to Coke right now is because we're going into this defensive run. So I expect Coke to have some more upside, for the next few months as a defensive play, and then I'll be able to, kind of see how that goes. We're already in line for the dividends, so that's a good thing. That's a good thing. So we'll continue to play this out, but I definitely want to consolidate into some of these ETFs to get this overall exposure to these different industries, and then have individual stock holdings that can go crazy on the growth side while allowing me to have exposure to the places that I want to have exposure to. Also, we know AI is the big thing, so in the future they're going to need to have these centers to produce energy and whatnot. So there's been talk that this is going to be kind of like a I don't know, like a one-off AI play. If anybody's been tracking that kind of stuff, yeah. So overall, the portfolio is doing absolutely fantastic. We had a crazy down day today in the market. Today was the largest down day in the market in 365 days, I believe. We were down about just a little over 2%. NASDAQ, I believe it was like 3.5%. Pretty crazy day. So let's get into the portfolio tracker. This is Dividend Watch. So you can add different tickers and then, kind of watch your portfolio, and they give you different numbers so you can kind of monitor what's going on. So we have the holdings, and I've already updated the holdings here as far as the price, the shares, the value, and you can see the dividend yield here. So what the plan is going to be is to add to these ETFs, and NU and PLTR will be primary growth right now. So eventually, how I mentioned, we'll probably trim or outright get out of the Coke position to put it into one of the ETFs so we can get this overall exposure and then have crazy growth potential with NU and PLTR, and then consistently uh, consistently build these positions. So you can see the overall holdings. You can see the dividends, the dividend yield, the dividend yield on cost, annual income, and the dividend growth over 3 years. What else we have? A value. You can see the price, PE ratio, the shares, the overall value, and percentage of portfolio. So a lot of people are interested in PE ratio. I mentioned how high PLTR was, but they will absolutely grow into earnings. NU as well, super high. They're going to grow into earnings. AMLP is only 13 and a half. So some good value over there. So we're going to build up all these portfolios. This one, a good amount of dividends. So 7.26% yield on cost. So obviously the yield is reflected or in relation to the underall or the overall the underlying stock price, right? So, and let's go performance, overall performance. It kind of tracks it. It's not going to be 100% accurate. It needs to update, but it kind of gives you an idea. And the summary, the total value, the annual dividends. Let's see. The number of holdings, the beta, volatility, the dividend yield, 6.91. I really, really like that. I think that's pretty good. And then, once we get rid of the Coke, this will be even higher. It'll be over 7%, which 7%, I think I can deal with that. 7% with potential for the underlying stocks to definitely grow. So, some asset appreciation, dividends. Now you can see what our annual income is, 3178. So 265 a month average right now, 0.08 cent per day. So essentially, no matter what happens, we're going to get 8% per day. So you can see how it works. January, February, June, August, we'll have some nice payments. And this is pretty cool. We'll start, compounding pretty quickly. So right now, again, we're at 265 a month, and we're going to continue to build this up, as well as, continue to have some growth stocks, just try to really get these growth stocks to see if they'll perform for us. You can have the calendar of the payouts, and you have the diversification. Obviously, we have the 3 ETFs, JPQ, JPI, AMLP, and then financial services was NU, Tech, and Palantir, and consumer defensive with Coke right now. So right now it's 9.49% consumer defensive, tech, individual tech, 12.76. Now obviously, JPQ is a tech fund, obviously, and then NU about 34.49. And a lot of this is, just because of the gains that we've had, it's kind of put us super overweight. But I am absolutely okay with that, just simply because, as I've stated in the previous videos, the portfolio is a new portfolio. So I'm okay with that. We're gonna stay concentrated on these. So everything is going absolutely according to plan. If you know anyone who's interested in starting a portfolio, make sure to send them over to the channel so we can get them to start the right way. They can start from the very first video in this series, and it will absolutely get them started the right way. Go check out the actual first video when we really got into it, video 1 in this series, and learn about the MLPs and how these can help you, what the tax implications are, and you'll find some good things. Now, if you have questions about any of this, make sure to put those in the comments down below. If you haven't already, like the video, subscribe to the channel, stay updated with me, and we'll continue to get this going the right direction. I appreciate you guys. I appreciate everybody who's been following the channel. I've been getting a lot of great feedback. I appreciate you guys. Share the channel. This your man, Boss Gang VIP. Let's keep doing it. All right. I'm going to catch up with you guys next time. I'm out. Peace.